Good morning, TC Nation. Mark Wine Trader here. Long time no talk, but I did want to jump on and do a quick video because today, as you can see here on my Tastyworks platform, we have an exact 45 day to expiration, 45 days expiration, normal options, September 15th, 2017. So it can be a great time to put on some trades here. So what I usually do now is, and for those of you who know, if you watched, by the way, Tastyworks you can get free. It's part of Tasty Trade, which is right here, and Tasty Trade is free. I love it. It's a great community. These guys are awesome. Their integrity is impeccable. You can learn a lot of great things. Everything you need to know how to trade just by watching Tasty Trade. It's free. They also came up with their platform called Tastyworks. Right? This platform is also free. All you do is, if you want to get this free software, if you go to my YouTube channel, you'll see it. Yeah, you'll see it. Just go straight to any one of the videos. Go down. It'll say get private coaching. You can click on that. I'm sorry. Get Tastyworks here for free. You can get on that. It'll click you. It's free. Or if you wanna get access to any of my charts, you can just go to my website and hit chat. You can chat me up there or leave an email on YouTube, like one of the videos, put a comment, and then go from there. Or if you go to my website right here, and the links in the YouTube video as well, you can just chat and send me a message, and I'll say hi. All right. So, but the most important thing is today is perfect 45 days to expiration, as you can see here. Now in Tastyworks, there are two different versions, all right? There is the downloadable version, which is a program right here. You download on your computer. This is their flagship program, and it's hella fast. It's really good, all right? It has all your strategies on it and whatnot. It's still missing some of the stuff in the old dull version that Tastyworks put out, which I still like, and it's really good for those who are new to trading or new to the platform. And so that's why usually when I do these videos, I don't use this downloadable version. I do use the web version, okay? So you have the option when you log in to do that. If you have questions, just shoot me an email or chat me up, and I can walk you through that. All right. And in either mode, there's three versions: stock, trading individual stock, the table view, which is if you've been trading options before, you're used to this view right here. I personally like the curve view, which is right here. It's a lot more visual and more intuitive, in my opinion, and it just makes it easier to read. So when I see that there's a perfect 45 days expiration, and from those of you coming with Thinkorswim, you can tell by right here, right? So it's perfect. The yellow are the weekly expirations, and here's the normal expirations, and you can see the September 15th, 2017 expires in 45 days, so it's perfect. So what I usually do from here is I'll go through the different indices, major ETFs, and I'll see what's going on. So for example, you can do this either in the grid, or you can just type it in here. So whichever way you prefer. You can create watch lists for anything, but here's SPY. IB rank is 9. IB rank stands for implied volatility rank. The higher the number, the better when you're selling these options. I like to assume above 35 at least. So that's 9. Let's look at diamonds for Dow Jones. 12. Okay, how about IWM for the Russell 2000? 17. And how about QQQ for NASDAQ? 44. Out of all four major indexes, I'd rather choose this one. So if you watch any of my videos, you'll see that I talk about golden geckos a lot, which is the standard trade. So what I started off with. It's what I teach for free, and it's great if you're just starting out. So what I do is, once I find something with high IB rank, I'll confirm it, and I usually, for those of you like me who came from Thinkorswim, the old platform that the founders of Tasty Trade and Tastyworks created, I'll go to my Thinkorswim chart and I'll punch it in. Again, if you want these charts, I'll give it to you for free. Just subscribe to my YouTube channel and give me a comment, and I'll let you know. So in this chart, I have two different setups, but right here you'll see what percentage the price has changed over the last 5 days. Here's IB rank. It's in yellow down here. It's 44.7% because it's not green yet. It'll be green if it was over 50. yellow if it's in between, and if it's red if it's below. All right, so it's a real quick, easy, color-wise way to see what's up with the IV rank. Now, the most important chart on here is probably the bottom one, because it's your IV rank chart. It'll tell me my IV rank, current implied volatility, daily one standard deviation move, which will be plus or minus $1.45 for this particular stock, which is QQQ. A weekly one standard deviation move will be plus or minus, and a monthly one standard deviation move plus or minus. So that's kind of the range based on the implied volatility. Now, here's my chart. So usually I kind of just take a look, and I was like, well, I am kind of bearish because on my OBV cross chart it's red, which means there are more sellers than buyers. So the stock should go down. Everything is turning over. All right, and I do want an IV rank kind of be kind of high. So I'm a little bearish. I do want it to go further down, because if it does go further down, IV rank will pop even higher right here, and I'll be able to sell more positions out and collect more money. So when I put in a trade today, I'll probably do a really small trade, because I should say really small, but on the smaller side, because IV rank is good. It's 44. It's not about 50, but hey, but at least it's a lot higher. So I'll put in a good sized trade, but always leaving more so I can add on later, and a lot easier to manage. Now, my private coaching clients, you know what I mean by that. As for if you're new, just start off baby steps. All right. Now, I was hoping for this continued downward trend, right? Like a stair step, you know, high, low, went up, but didn't go more than halfway, then came down. And then I thought it would crash down once it got here again, but it didn't. It kept on going up. And it went higher than here and here. Okay, so not much higher, but it did break above these highs, as you can see right there. So, and now it's turning over as of 3 trading days ago. And so what I want to see, if this stays red and it did to 80, we should be having a nice downward trend here. And if this turns red like it did here, you'll see a nice downward trend right here. See, it was already red. Okay, my OBV cross is already red, indicating more sellers than buyers. Here's my slow stochastic indicator right here was green, and when it went red right here this day, it was a strong downward trend. Boom. So I kind of want to see that here. So I want to start legging in right now, because it's a 45 days expiration. The other chart I use from here is a lot more clean. I'll do this one. So it doesn't have all the gobbledygook. I mean, I'm just so used to that from day trading. Some of you want to do that, is fine. I just have this IV rank chart only, so I can really say, well, I can ask myself, well, when was the last time IV rank was at 44.69, and how long did it stay there? I'll just hover my mouse and look, right? Well, last time it shot at this nice long period, but less than 45 days. See that? Okay, to expiration. That's what we're doing here. So from here, you can put on a simple golden gecko. So I will go here, and I'll type in QQQ like I do here. You go to strategies, and you can click on iron condor if you're going to do a golden. In fact, if you just, well, I'll show you guys both. I'll show you the normal golden gecko, and if you're starting out, you might want to start out with just half of one. So here's a golden gecko. You want to make sure your normal iron condor has a star on it. Here's what you want: 45 days expiration, monthlies. Click on 1 standard deviation, and you're going to click on 10, and you can adjust this later. Okay, and as you can see, it filled it up, and you can't see everything, right? So this slider bar right here is your zoom level. So I will just click on the minus sign to zoom out. There we go. If you have a wheel on your mouse, I believe you can just scroll your wheel and you can zoom in and out. Okay, like so. All right. Now, here's what I do. Now, as you can see, it'll tell you my strike price, right? I don't really look at this too much, to be honest. I usually always look at it like this. And what I want is, it gives me the probabilities, and I trade strictly on the math. So I want to get as close to 84% as possible on the bottom, which is the put and call that I'm selling. So if you hit this button right here, you can toggle back and forth. See what happens? So what I want to do is the put I'm selling, so it's a sell put, sell call. The puts and calls I'm selling, I don't care what strike price it is. I just care what the probabilities is, what percentage are probably out of the money those strikes are. So I want to get close to 84%, or close to this, as close as I can to this vertical dash line right here. because as you can see, the indicator, that's one standard deviation out of the money. What that means is, if you're new, that's one standard deviation away from where the current stock price is. As you can see, it's right here. Okay, and right now the stock market is just about to open, so you might hear the opening bell is happening right now. Anyway, so this is now, see this tinted area right here in this platform? This is based on this number right here, this current implied volatility. This is the expected move of QQQ over the next 45 days, right? So based on the math, based on the implied volatility, it's telling you, the math says this is where it should kind of trade the range from. Now, what are we betting? A golden gecko is betting outside that range, meaning we are betting it'll stay within one standard deviation move, which is right here, further out. So see this green area? As long as QQQ, this green dot stays in this, anywhere in this green area, we make money. Okay. Now at the same time, I'm gonna buy the put 2 standard deviations out of the money, which is out here, and it should say 2%. I want to get closest to this line right here, and same thing, I'm gonna buy a call 2 standard deviations out, which is probably even the money 2%. Okay, this line right here, and I can see here that I can collect 69 cents per contract, which is $69. I have a probability of making profit of at least 72%. And if I click on this middle dot right here, I have a 90% chance of making 50% of my max profit. What that means is I have a 90%. Not only do I have a 72% chance of making money, I have a 90% chance of making 50% of my max profit. Well, what's my max profit? Well, based on this right now, I can sell this to somebody else for like 69 bucks. So let's say that means I can buy it back. I have a 90% chance of buying it back for half of that, which means I'll make 50% of the profit, of the max profit. And that's all that means. And you can go ahead and put these on. Okay, because it's, you know, perfect 45 days expiration. Now, if you're just starting on, this is one way. So you might be worried, like, well, Mark, it's such a bull market. What if the market just shoots higher, 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 shoots super high quickly or super low quickly within the 45 days, right? Like it drops this way or this way. Well, and you're also thinking, well, Mark, it's such a bullish, such a strong market. You know, what if I don't want to bet that it'll stay below a certain number? I only want to be worried about staying above a certain number. Okay, that's why I said if you're just starting out, you might want to do just half of a golden gecko, meaning just do the put side, because most people, when you're starting out, you can understand when you put on a trade, you're betting that the stock will go higher, and so it's a lot easier if you just do this side, because right now you're betting it'll stay above this strike. I'll click on this so you can see. Right now I'm betting it'll stay above $135 and below $152. Okay, that's the bet you're making. But if I close it, if I delete the call side, this side like this, all of a sudden, look what happens. Remember, anywhere in the green area, you make money. So basically, as long as the stock goes up, you're making money. But you can still win 3 ways. Look, you win, of course, if the stock goes higher. You win if the stock even goes down a little bit, as long as it stays above 130 right here. Okay, this green area right here. Right, you still make money. And of course, if it stays where it is right now, it still makes money. So any of those 3 things could happen between now and the 45 days, and you still make money. Now you're going to collect less because, right, you're going to collect less because you're not collecting any money from the call side. And it still says pre-market, so we have about 3 more minutes of the market to open, and you might want to wait for that, and these numbers will change. So just keep that in the back of your head. So now in this scenario, all I'm betting is, hey, I just want the market to go higher. This QQ to go higher, and I'll be able to collect the whole thing. Now, if you look, I have a probability of profit of making 85%, and my probability of collecting 50% of max profit is 89%. Okay, I think it's probably closer to 90, but anyway, I like to hover around that 89-90% range. And then you can go ahead and put your trade in like that. And this is your review screen, so you can see, right, what happens, your break even, what you're selling for those of you who are new. And here you go. This is, I really look at this number a lot. Now it's at 90%. So it kind of just depends on what's its priced at pre-market. And let's look. Okay, so now let's take a look at my chart again, and we'll do my intraday chart. Meaning I will go to my 15-minute chart, which is right here. So I will go to here and I'll click on this further. All right, back to QQQ. So I'm looking at what's happening in the market. I will now look at the 15-minute chart right here. 1 second. All right, sorry for the glitch there. Computer thing had to reboot, and I want to disable this real quick. All right, so now that the market's open, I'm looking at QQQ right here, and I'm looking at the 15-minute chart, and as I can see, here's what happened pre-market. It shot up, right? But it didn't go higher than the high during the opening, which is right here. Okay, but it also didn't go below the low. So now what I'm looking at is you can place your trade no matter what, but I'm looking for a downward trade, and this is my 5-day 15-minute chart. So usually what I'll do is I'll go to the grid and I'll just kind of take a glance, and these are all the charts, meaning that I have set up on the grid pattern here. One is my 1-minute chart, one is my 15-minute chart, this is my daily chart, and this is the weekly chart. So and because it's shrunk like this, you can't see all the information and whatnot. And to expand them, all you do is you just hover right here, and then you click on it, and you go to maximize cell like this, and now I can see everything. And then see how there's a 4 grid right here, and see these arrows. I can now just kind of toggle between all of them, and I already know that the bottom left right here is my daily chart. So anyway, what I'm looking at right now, here's my 15-minute chart, and I know I'm going to put on some trades anyway, but I am bearish, meaning I kind of want it to go further down. And here's my daily chart, as you can see right here, and I'm looking for it to break down further. So maybe I'll just change this to 6 months daily. It's a lot easier, and then I can zoom back out again. Yep, and that's what I'm looking for it to happen right there. All right, so again, recap, just hold on, I'm gonna see the market. Let me see what's happening real quick. And you can let me go to I'll just go to the grid real quick. And here's what you can do. You can go to the grid. I just kind of like to take a peek at what's going on. So I have my grid here, and I have my notable stocks in my Tastyworks account, and I'm sorted by IV rank, high to low. So these are all the stocks with high IV rank. As you can see in purple, these are why they have earnings. So if you want to play some earnings, you can. I don't usually do those, especially when you might want to watch out. But once you get the hang of it, go ahead and, by all means, just as long as stay small, don't get too crazy. And you can put on a filter. Shoot, I don't think you can see it, but there's a little funnel up here. Click on that, and you can exclude earnings in the next, I don't know, 60 days. So I don't want to look at anything that has earnings within now or 60 days. And I only want to look at stuff with, say, IB rank over 35. And I only want stuff that are liquid. So I'm going to take off those two, and yeah, it should be it. So these are the stuff that fit that criteria. QQQs above 44s. That's what I'm doing. That's the only ETF though. Philip Morris, Costco, Facebook, Potash, Microsoft, McDonald's, and Qualcomm, of course, QQQ. So again, QQQ means is your safest bet. Yeah, nothing else as far as the major markets will fit that. So anyway, perfect. So yeah, value, that's what I'll do if you're starting off. Let me go right here back to see. So here's the 15-minute chart. So in the first 15 minutes, it'll be 1 tick. Because the market just opened, here's the 1-minute chart. So every tick on here is 1 minute. So as you can see, they bumped it up overnight, and then it's kind of failing right here. That's good. I really want it to go lower. All right. So again, if you have any questions, well, first of all, thanks for watching. Sorry for the glitch today. I'll try to edit all that out so it looks more smooth. If it doesn't, I apologize ahead of time. And if you have any questions, please feel free to leave a message on the YouTube channel, hit like, whatnot, and if you want to link to the free charts, do a message there, or check me out on the website, chat me up there, and I really appreciate it. So don't forget, 45 days to expiration today. Put on something, even if it's small. Put on something. Okay, you can't make any money if you don't trade. So limit your risk if you want, but at least put on something. Private coaching clients, you know what it taught you, get it on today. All right, thanks.